We're heading into the middle stretch of the session, and it's time for a fresh check on the tape. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to bring some clarity to the chaos in today's markets. Since the last hour, the conversation has shifted more toward the Federal Reserve and the plumbing behind the scenes of this market. According to reporting from MarketWatch's Charlie Garcia, while everyone is fixated on when the first rate cut might arrive, the Fed has already made what he calls its big money move. The focus there is on liquidity tools. Think back to the 2019 repo crunch, and the idea that if we get another funding squeeze, money market funds could be the first domino to wobble. That's not about today's tick-by-tick moves, but it is about the foundation under this rally, how secure short-term funding is, and whether there are hidden cracks. At the same time, the more speculative edges of the market are still humming. Barbara Kohlmeier's piece on Saxo Bank's outrageous 2026 scenarios is still making the rounds. Gold at $10,000, quantum computing nuking crypto security, AI scandals blowing up balance sheets. Again, these are thought experiments, not base case forecasts, but they're reinforcing where traders are leaning. Hedges in hard assets, caution around crypto infrastructure risk, and serious questions about whether AI expectations could outpace what companies can deliver. On digital assets, Jurika Dujmovic at MarketWatch reframes Bitcoin in a very macro way. For some governments and big players, this isn't play money anymore. It's a tool for gaining power over the dollar. That sovereign adoption narrative is part of why crypto volatility remains elevated. When nation-states and large institutions are in the game, the geopolitical angle can matter as much as regulation or ETF flows. On the equity side, AI strength remains a key theme. Emily Berry's piece on Credo, one of the year's hotter AI-adjacent names, highlights that it's not just top-line growth driving the story. The company is diversifying its customer base and broadening its product suite. That kind of breadth is what traders look for when deciding whether an AI winner is a fad or has legs beyond one upgrade cycle. We're also seeing some under-the-radar, more personal finance-oriented stories that can still affect positioning. Quentin Fottrell is out with a couple of pieces on household financial decisions, from changing credit card strategies in middle age to a sister considering buying her struggling brother's house and letting him live there for free. These don't move the S&P by themselves, but they speak to a broader backdrop. How comfortable or stretched consumers feel, what balance sheets look like underneath the surface, and how that might feed into spending and housing demand. And in the background, one risk flag hasn't gone away. Mark Hulbert's column, warning that market timers are at extreme exuberance, remains very relevant. When short-term sentiment is that hot, professionals often see it as a contrarian warning sign, an area to handle with care. It doesn't mean the bull market is over on the spot, but it does suggest that any disappointing data, a liquidity hiccup, or a geopolitical surprise could spark sharper pullbacks than we've been used to in recent weeks. Looking to the next hour, I'll be watching three things closely: how markets digest this new focus on the Fed's liquidity toolkit and money market funds, whether Bitcoin and related plays continue to trade like geopolitical assets rather than just risk tokens, and if AI-linked names like Credo can keep attracting flows even as sentiment indicators stay frothy. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.